Good evening, everyone. Welcome to Halal Investing India. Today, we are going to discuss a very important topic, and that is how to do halal analysis of a particular company. I know you want to invest in a lot of companies, but you are not able to invest in them because, as a Muslim, you have to keep a track of a lot of things that is not possible. That's why, from a research paper, we have analyzed all the things and we have right now come up with our own certification that is called as Halal Investing India certification. In short, HII certification. So from now onwards, we will do analysis of these companies. And in this video, we are going to tell you how you can do the analysis by your own. If you have time, you can do the analysis by your own. And if you don't have time, you can come to our channel and we will do the analysis for you. So without wasting any time, let's start. In HII certification, we are going to do 5 checks in total. If a particular company will pass all the 5 checks, then that company will be HII certified. It means as a Muslim, you can invest in that company because that will be Sharia compliant stock. Let's start. First check is nature of ownership and intention. It is very important. Actually, what happens in stock market is there are two kinds of stocks. One is common stock and second one is preferred stock. What happens in common stock is you are owner of that company. If there are 1,000 shares and you have 100 shares, it means 10% of the company is yours. So now in common stocks, you are having decision capabilities as well. So you are basically sharing the risk of the company as well. But what happens in a preferred stock is you have more dividends but less voting rights. But according to Islam, if you have less voting rights, it means basically you are not taking all the risk. That becomes a problem. So you have to be aware that you are purchasing a common stock only, not a preferred one. Second thing, and it is one of the most important, it is part of this check only. In check number 1, the second thing that we are having is fundamental analysis. As per Islam, you can't invest for short-term benefit. You have to do the fundamental analysis. And no doubt, that's the best thing that you can do. Now comes our next check. Check number 2. That is nature of business of the company. I know you all are well aware of the facts, what things are not permitted in Islam and what are permitted. Basically, this is the same thing. If a company is doing business in such a thing that is permitted in Islam and it is halal, then it's fine. Otherwise, it's not fine. So you can't invest in that company. But in modern world, we know what happens. Let's say a company is dealing in 100% of the safe products. It means Sharia compliant products. But a small part of the revenue is coming from non-permissible products. What happens then? So for this, in that research paper, it is mentioned that ulmas have come up with a percentage basis. There is some percentage-wise distribution. If 5% of the revenue is coming from non-halal activities, then the stock will be fine. In case of hotel and resort, share trading, stock broking, and rental from Sharia non-compliant investments. In this case, it can go up to 20%. Otherwise, it should be under 5% only. This is check number 2. If a company will pass check number 1 and check number 2, then we will go on up to check number 3. Basically, this check is about nature of assets of the company. We already discussed about what are assets and what are liabilities in our stock market basics shorts. If you have not seen that shorts right now, I will give up the link in the description. You can watch them right now. So see, what do you mean by nature of assets of the company? So basically, let's say there is a company and it has only liquid assets. Now, what are liquid assets? Like cash, stocks, all these things comes under liquid assets. So if a company is having only liquid assets and the value of that company is 1 lakh rupees and that company is having 2 lakh in the liquid assets, let's say in cash. So what happens is this is not applicable because 1 lakh already that company is extra having. It means definitely it will be a preferred stock for everyone, but not for Muslims. Because in this case, that extra 1 lakh will be riba and it is not allowed. But again, the question arises, how we will decide whether it is allowed or not. So again, there is a ratio. If the ratio of liquid assets to total assets is less than 33%, then it's fine. Otherwise, you can't invest in that company. But this ratio is not applicable to companies like software companies and all, because basically the most important asset of a software company is their employees and they are having very less amount of assets. That's why. But it is applicable for manufacturing companies like oil and gas, etc. Now let's move to one of the most important things, that is debt to equity ratio. What is this? Now we know that interest bearing activities are haram in Islam. So basically you can't invest in them. But the question arises, most of the companies right now are running on interest only. They are taking loans. So what to do now? For that as well, ulmas have come up with a percentage basis. That percentage is again 33%. So basically, the point is that financing should be less than 33%. So what does it mean? It means debt of the company divided by its market capitalization should be less than 33%. If it is not so, then it is not allowed to invest in that company. Now, moving onwards to our fifth and last check. That check is the last process in your investing journey, and that is, it is not allowed to invest in transactions like short selling, futures and options and all, because in case of such kind of transactions, you are not owning the assets, you are just selling them. So these kind of transactions are not allowed. So basically, these were the 5 checks that we were talking about. When a company passes all the checks, then that company is HII certified company. And as a responsible investor, you can invest in that company. Thank you.